Hey everybody, it's Pete. Good morning. How you doing today? I hope you're having an awesome morning. Stock futures are down a little bit today. In today's video, we're going to revisit what we promised to do yesterday, which is day by day this week. We're going to read the tape together. We're going to read the order flow together and then walk through how that translates into trading opportunities this week. If you remember yesterday, we talked about the difference between a short covering rally and new buying. We're going to revisit that today because I want to make sure that you understand from one day to the next how to adjust your trading based on the market conditions, which actually kind of falls into the category. We actually had a member in our swing trade community yesterday ask why we didn't put on any new swing trades yesterday. And there's a big reason for it. The market conditions. We need to have really absolute conviction that we're going to see follow through. Remember, when we choose to put on risk, it's because we feel there's a high likelihood of our profit target being hit. We didn't have that feeling yesterday. So I'm going to walk through why and why we didn't put any trades on. But I think the biggest thing that I'm the most excited to talk to you about today is I'm going to show you this really quickly, and then we're going to come right back to it. So I just want to show you this. I just want to walk you through this. Okay, that was last night's coaching call. We have every Monday and every Wednesday night, we have boot camp coaching calls. And last night was pretty intense. And the reason I want to show you this document today is because I want to show you how to up-level your thinking. I want to inspire you to go a little bit deeper into what it means to think and act like a professional trader, and maybe challenge you a little bit to ask different questions if you're not getting the results that you want right now. So I just have to do the disclaimer. So stick around. I'll be back in just 1 second. I'm really excited to walk you through today's video. Okay, so thank you so much, everybody, for joining me today. Obviously, with everything we do here is for educational purposes. It's up to you to make the final decision. It's my mission to help you make better decisions. And we've had some challenges the last week or so. It hasn't been as obvious as it was probably for the previous 18 months. And that's not a bad thing. And I want to walk you through something that is kind of a conceptual thing that a lot of traders don't know, because many people in the markets only understand and feel comfortable with buying stocks as they're starting to move up and continue to go higher. One of the challenges that we see, especially new members coming into the boot camp, somebody who's looking to learn how to make their active trading decisions, is not understanding how to allocate capital when the market is not straight up, when it's kind of going back and forth and that kind of thing, if not even to the downside. But we're going to focus right now. Let's say that we're going up, we're kind of dancing back and forth. We're not in an uptrend anymore, not necessarily in a downtrend, but there's some individual opportunities in some certain stocks. That's when you have to understand how to learn what many people call hedging. Hedging simply means that you are understanding that there's opportunities on both sides of the market, which is buying stock and short selling stock at the same time. Now, you could do the short selling by buying puts using options. I think that's probably the most common way of doing it. But here's the big thing I want to get across. And by the way, this document that we have right here that I just showed you, this is the outline. It's actually all the topics that we discussed last night. I'd like for you to have a copy of this document because I really want you to think deeper. I want you to raise your game a little bit. Again, I want to congratulate you. I mean, you're here 7:30 in the morning with me. That shows you how bad of a burning desire you have. So I want to invite you to click the link in the description. I believe it's called Bootcamp Coaching Call or something like that. It's a Google Doc. Click the link below the video in the description, and it will take you to this page. Okay, so I just want to zoom this out just a little bit to give you an idea of the depth of everything that we talked about last night. It was quite a bit. I think this is probably one of the top things where we talked about stacking the order flow. We talked about custom scripts last night. There's a ton of stuff that we covered last night. So what I'd really like to do is ask you, and this is another one. We had another 90-minute game plan call. That was a video that was given out last night. I want to challenge you to ask yourself, am I thinking deeply enough about the trading that I do? Am I thinking deeply enough about my position sizing? And do I have a formula for it? How do I understand when price action changes? How do I understand to have the discipline to get out of trades? And we actually had a raw discussion with somebody last night basically talking about if you can't respect risk, you shouldn't be a trader. There's really no other way to put it. Okay, really no other way to put it. All right, so I want to come back onto the screen, and then we're gonna start to break down. So please click that link in the description. I personally want you to think maybe I'm not going deep enough into before I make my trading decisions. And I think one of the most exciting parts that we discussed last night was how do you make adjustments in your risk reward based on market conditions? And I think that's a really big one. How do you also make adjustments based on when conditions are perfect versus when they're less than perfect, and how do you manage those winning trades? Again, I like to have kind of like take notes every day, and I like to inspire you to take notes every day. So what I want to ask you now is really ask yourself, how do you make adjustments in position size, in profit targets, in stop losses? And actually, that's one thing I want to talk about as well as we move down the document a little bit here. There's a part that we talk about on losing trades that I think is very important. This was a big one here last night as well. How to eliminate the fear of losing money. Gosh, there's one in here that I wanted to make sure that I brought up to your attention. Oh man. Oh gosh. All right, I'll see if here it is. Okay. This one right here, having hard stops and working losing positions. I think this one here, working losing positions, is super interesting one. Again, if you want this document, click the link. It's in the description below the video, and I'd like to inspire you to get in there and make a copy for yourself. One thing that we talked about last night was many traders mistakenly believe that as soon as you put a trade on, if you're going to get stopped out for the full dollar amount, or you're going to make all of the profit on the upside, okay? That's not how professional traders manage their risk. It's not set it and forget it. There's plenty of opportunities, especially if you're actively managing positions, where they move in your favor, and we have a plan for where we're going to add to that trade if it moves in our favor. Now, stacking, everybody knows that as pyramiding into a position. But there's the opposite side of that, which I just want to make sure you understand what we're talking about right now, which is this one right here. It's an advanced method for working losing positions. Now, this is really advanced. If you think about it, you put on a trade, you have X amount of shares, and it starts to move against you, but you absolutely love the idea. You did the hard work, you stacked the order flow, you read the tape, you thought it was a great idea, but you get that one giant candle that goes to the downside that kind of scares you out of the position. The concept that we talked about last night is there's two things to consider: scale out or get out. And I want you to write this down because it's a big deal. If you have a position that's moving against you, you absolutely love it. Maybe it's moving against you fast. Maybe it's just one candle and you're still not sure what to do in that position. If you have 1,000 shares, scale it back to 300. You're reducing your risk. You're maintaining the position so you could read the tape. And here's the biggest part. This is the next part of the trade. Immediately after you scale back your position, put an alert in your trading software for where you would put those shares back on, because now you're getting feedback from that position. It's validated again. Raise your hand, and this has happened to me 1,000 times, where you're in a trade, you get shaken out on that one candle, and it ends up doing exactly what you thought. You're not trading scared. You're managing risk. You're managing your risk exposure until the trade does what you think it should have done in the first place. So think about that. It's an advanced strategy. We understand pyramiding into a winning position. In this case, we're scaling back in a position that's not working. So please click the link below, get this document, make a copy for yourself, and come back to future calls and ask me some questions based on what's on that, because it would be kind of fun to go back and forth. I just want to answer this question. Jez Nola, please read your emails. I must have sent it out about 12 times in the last day and a half. If you're not getting our emails, if you're not in Discord, if you're not in the forum, it's absolutely imperative that you reach out to support. So support@stocktradingpro.com. That's also in the description. Yeah, there's no reason for you not to have that, because we messaged you probably 12 times in a 48-hour period. So you got to get in there and read your emails. If you're not getting them, go to customer service. All right. So we also said today we're going to talk about Twitter. That was the big thing on the topic of discussion, which was the Twitter CEO, Jack Dorsey, stepping down. We're going to do technical analysis on Twitter today. Look, personally, I can tell you, as having been an entrepreneur since 1988, actually, that's how long I've been both self-employed as a trader and running some other kinds of businesses. I've had a problem with this for a long time. Twitter has over 500 million active subscribers, and the stock is $40. Meanwhile, Facebook is 400 something. It's almost impossible to run two public companies without scattering your focus. I personally, from an entrepreneurial perspective, we're going to dig into the charts in a second. I personally believe that this is the best thing that could have popped. Now, I don't know anything about the person that is the new CEO. I'm talking about from an actual workload and what we're going to start to look for in the charts to turn Twitter stock into a opportunity in deciding whether or not we're going to be buying Twitter stock. We're going to break that down the same way we broke down the market yesterday, which actually the market's trading a little bit lower right now. So good decision from a management perspective that Jack Dorsey is stepping down. He's probably just going to go manage Square full time. I believe he's still going to be on the board of directors, which is also probably a smart idea, right? So now we're going to work our way over into Twitter chart after we actually pay attention to the market. We're going to come back to the market because I want to make a point about what we talked about yesterday, which was reading the tape and having that North Star of what we're going to be paying attention to. As a matter of fact, I think I'm going to do that first. I'm going to go into the email from yesterday. If you remember yesterday, we had a big conversation, and I'm going to zoom this in a little bit for you as well. Stock futures are down this morning, which validates yesterday's trading argument that we identified the opening rally as short covering. If you remember yesterday, we made a very long discussion about the difference between buying that is getting out of short positions, which was Friday's short selling. So Thursday into Friday, Friday into the close, early short sellers betting it's going to go down. For short sellers to exit those positions, they also have to buy the stock. So if you remember yesterday, we talked about a fast rally on yesterday's open, which is what we got. And does it get followed up by new buying? So if it does, we said pushed up and holds the bid, that means fresh buying was coming back in. If it rallied fast and pulled back quickly, that meant that yesterday's buying was short covering, which means we did not have the feedback we needed to initiate new swing trades. And that's what I want to walk through. Again, I'm challenging you. Am I building a big enough argument? Am I saying, and this is the reason why, and this is the reason why, and this is the reason why I want to buy that stock? If you're running it on one reason, I saw it on TV last night, not a good enough reason, which actually brings us to another point that we talked about on last night's coaching call, which was, where does trading confidence come from? How do you have unshakable confidence and never hesitate to put on a new trade? You see the trade, you put it on. You see the trade, you put it on. It's because you did the game planning. It's because you did your own homework. It's because you scanned, found your own ideas, and then understand why those are good ideas. So working our way through the email again this morning. So that's the argument we were looking for. We were looking to identify short covering versus new buying. We did not see the feedback we needed. And that's why I did not put on new swing trades yesterday. I was completely flat on the swing trade yesterday, only up on day trades yesterday. Day trades were the only opportunities I was putting out there. So again, challenging you, which is what I'm doing in this document, challenging you to think a little bit deeper about what information do you need to make decisions. So if you remember yesterday, we had a long conversation here on the live stream about what is our North Star for trading this week. What is the line in the sand? How do we put new trades on, and how do we make those decisions? All right. We need information. And basically that comes down to, we spoke yesterday about Monday's opening price being the North Star of what we were looking for. So there is yesterday's opening price. So now we're looking for the rest of the week to unfold above or below the opening price. Okay, above and below the opening price. Let's see. Michael, I thought you promised to do Black Friday. Michael, we've been running a Black Friday sale since Thanksgiving Day. There's a video here on YouTube, and it's no longer available. I'm not sure what to say. All right. So, all right. Anyway, what I want to get across here and get this across in a big way. The market is not as obvious it was. That's the single biggest thing that I want to get across to everybody. Okay. Now that the market is a little bit, it's still bullish long term because obviously you can see that big blue line all the way back from March of 2020. But you need to be smart now. Do not pick bottoms. Absolutely need to have what we call that line in the sand, which is tape reading. And I want to challenge you right now during this call, after this call, as this week unfolds, whatever stocks you are trading, put those stocks on a weekly candlestick chart and draw a line at Monday's opening price, which was yesterday. So that's the first print for this week. So what I'm teaching you right now is how to understand how to read the tape from day to day and week to week, but more importantly, how that translates into trading decisions. How that translates into trading decisions. So we kind of talked about this yesterday during the day, actually, with new members who did take advantage of the Black Friday opportunity that we had, which is how do you make decisions when the market's going down, but you still want to know about buying a stock? And I'm going to work your way into that in Twitter because the minimum criteria that we look for order flow is the hourly chart, which is the 60-minute chart. So if you didn't happen to see what happened in Twitter yesterday, the news came out that Jack Dorsey was stepping down. There was opportunities where volume expanded dramatically, but then we had new members of the community asking, how do we take advantage of this? And I was at the top of the desk, I had the microphone and I was like, we have some opportunity at Twitter today. We need, but this is the big thing. You needed that line in the sand. So what I'm going to walk you through now in Twitter on the hourly chart is what we're talking about, what I want to inspire you to do on the weekly chart with trades you're looking at this week while the market is a little bit less obvious. Why is it less obvious? Because of this. The variant, the Omicron variant is getting worse. At least it's spreading. I get worse is relative. I'm not really sure what other word to put on it. But here's how we're going to work through Twitter. Okay. So working our way through Twitter. Yesterday we talked about, and a lot of members like, how do I get involved in Twitter today? How do I take advantage of this opportunity right now? And that was when I said you need to break it down to the minimum viable opportunity, which means we do not look for opportunities until the hourly candlestick is at a minimum green. Write that down. Looking at Twitter, the minimum criteria I'm looking for is it needs to be green. Why? Right? That should be like, why? Why green? And why the hourly chart? Well, if we're day trading, which is the opportunity we're talking about yesterday, and breaking down Twitter using technical analysis, and turning that into tape reading. Tape reading is simply is price moving closer to or further away from a reference point. Now, you know how to read the tape because when you're in a position, nobody knows that stock better than you. So you know if that's your price, you know better than anybody on Wall Street if it's moving away from that price to the upside or away from your entry price to the downside. Our job as tape readers, our job as traders, and we're using Twitter as an example because of the news story, is to first have a spot that tells us, okay, I'm not in the trade yet, but now I want to stack the argument to determine if and when I should be thinking about an entry signal. So if we're looking at Twitter here and yesterday, and I was the first person to say, yes, we want to be paying attention to this, but it needs to be above certain criteria. And we called that out yesterday, which was the hourly candlestick charts. And I'm going to translate this into Twitter for how we're going to trade Twitter for the rest of the week. So you can see and I want to draw this line so it's super clear what I'm talking about. So that's the first hour in Twitter yesterday. And you can see this is the opening price and that's the close. That's why it's red. So all the way up there was the opening price. So we were not looking for an entry in Twitter yet. So we're just sitting back. This is how trading becomes stress-free. This is how trading becomes structured. This is how profitable trading becomes predictable because you're doing this on every trade that you take. Is this a lot of work? Well, do you want to make a lot of money? More work, more money. You got to put in the time to understand what to do. So again, I challenge you to ask yourself better questions. So again, this document that I just gave everybody, if you just happen to come on the call right now, go into the description and get the link for this document. If you have questions about this, email our support staff if you have questions about the boot camp like somebody just talked about before. But I'm giving you this document so that you can understand there's higher levels of thinking if you're here and you're struggling and you want to be here and happy. There's no other way to put it, okay? So what we're talking about in Twitter, and we're going to first break down yesterday, and then we're going to map out the week. We're going to script out the week in Twitter and what we need to watch. So the hourly chart, the first hour opened, the news came out, we're looking for a spot. No, we're not looking for a spot because the whole hour it traded below the opening price. So now I'm going to break this out. I'm going to go down, and you could do this on a weekly and a daily, an hourly and a 5-minute. I'm going to go to the 5-minute just for day trading purposes and walk you through exactly what I'm talking about. And I'm going to bring in another candlestick here. And this one's going to be the vertical line. So I'm going to go over to the 1030 candle. Hang on, let me just zoom this out. Hang on, let me zoom that out. Okay, you know what? Let me just do the hourly chart. It's probably easier to explain it. So now we go down to the next hour, which is here. Okay, so that's the second hour. So here's the opportunity that I want to explain to you. I need to zoom this out so you can actually see it a little bit more detail. Do you see this price action here? In this hour right here, from here down, we were below the opening price, so we're not doing anything. From here up was an opportunity for us to determine, yes, right now in the time frame that I'm watching, I can now drop down and look for an entry. Here's the thing I want to do. Remember we talked about stacking the order flow? I'm going to add another line in this equation, which is today's opening price, which is all the way up here. So that happens to be the opening price of the first hour. It also happens to be the opening price for the entire day. So I'm going to walk you through two different opportunities so I can really drill this home for you because it's an important lesson. So in Twitter, this is the opening price for the day. This is the opening price for the second hour. So remember before how we talked about everything we're doing is building the argument. And I want to be a buyer because of this. And I want to be a buyer because of this. And I want to be a buyer because of this, right? So I'm just giving you two tiny pieces to the argument. Today's opening price and today's hourly price. Those two things, if they are in sync, then we look for opportunities to buy. If they're not in sync, but we have the minimum criteria, which is the hourly chart, we could look for opportunities. But you remember at the beginning of the call where I said one of the things we talked about on last night's coaching call, which was understanding how to adjust your position size and understanding when to adjust your profit targets based on the conditions. So I want to walk you through this, and I want you to write this down, maybe even watch this video more than once. If you're day trading, the same thing works on swing trading, but we're going to use a day trading example here. You have the opening price and you have the current hour. If price is above the open for the day and above the current hour, you're in sync. You can trade with conviction looking for follow through. If you're above the current hour, but below the day's open, you're not in sync. You could still take the trade because you have the minimum criteria, but that would be lower position size and a quicker profit. So do you understand? We actually talked about last night. This is very similar to driving, where sometimes you have open road and that's how you're choosing to drive. Then you have stop and go traffic. You're still going in that direction, but you've cut back on the speed. You've cut back on the aggressiveness of the way you're stepping on the gas because the conditions have changed. So I want to show you two good examples that will really help bring this home. So we're looking at Twitter, and you can see from hour to hour, part of this hour you could have looked for. Let me actually zoom this out a little bit so you can see it better. Stock, this is where it opened. It traded all the way up there. So during this period, you could have looked for entries. Then you go to the next hour, and this hour was below the opening price the entire hour. So there's no reason to look for an entry, and it was below the open for the day. You go to the next hour. Maybe there was this little pocket of opportunity where there was buying, but for the most part, you could see the rest of the day, there was no opportunity to be a buyer in Twitter based on stacking the order flow. Now, How do we take this out and look at opportunities to trade Twitter this week, right? Obviously, a good question. We do the same thing. We have minimum criteria that we're going to look for, which is what I just gave you. The minimum criteria is yesterday's opening price. So now we're actually all the way down here at 46 and change. So we got a long way to go to get all the way back up there. So what does that mean? As long as we are below yesterday's opening price in Twitter, I'm not looking for a new swing trade yet this week. If buyers can step in, interpret this news with the new Twitter CEO as good, and we start to rally, then if we get above the opening price, that tells me my argument is now valid and I could start to look for swing trades. Do me a favor, raise your hand if you think you can do this. Because what I'm again, I'm giving you a super tiny example of stacking the order flow, but can you look at a chart on, let's say, the weekly chart and say that chart's red? Why in the world would I be buying it if the smart money is selling it? Remember, the smart money are the deep pockets, the people, the Wall Street hedge funds that have those deep pockets, the big wallets that are moving stocks up and moving them down. If you look at your favorite stock and that candle is red on the weekly chart and that candle is red on the monthly candle, if smart money is selling it, why in the world would you be buying it? It's silly. There's no other way to put it. So now we're going to shift to the other side after we just broke down Twitter. We're going to go to a trade that was probably the top opportunity in our community yesterday. Okay. So the stock is LAC, and you can see the idea here. Now I want to walk you through the other side of a trade that's working out and initiating a swing position. So if we're looking at yesterday's price action in LAC and zooming this out, that's yesterday's opening price, and that's where it closed. That's why it's green. But what I want to do now, and this is going to be kind of a fun example, remember how in Twitter we had the opening price for the day and the opening price for the hour, and we said we're not looking for any opportunities unless they're in sync. Now we're going to show you the same thing on the opposite side of that in LAC and how day trading and swing trading can kind of be in sync together. So we're going to drop this down and do the same type of price action here, where we go hour by hour and whether or not we should even look for an entry. Remember, that's probably the toughest part, or the most challenging part for new traders, is if you should even be looking for an opportunity to buy. So if we take LAC, you can clearly see LAC had some buying opportunity yesterday, right? Especially whether it's a day trade or a swing trade. A swing trade, it turned into an amazing move to the upside. Also, something I want to point your attention to, again, if you happen to just join the call, I put this document in the link below, but I want to make sure that you are challenged with something that we talk about here. Okay, the profit maximizer. So yesterday in LAC, the profit maximizer gave us the exact method, the exact structure for holding this winning trade as long as possible. And actually the exit was all the way over here based on the profit maximizer. So it actually ended up being a pretty darn good trade yesterday, and a relatively easier one using the profit maximizer. But here's what I want to do. I want to challenge you right now looking at this. Can you look at this candlestick and see the opportunity from 1 hour to the next, 1 hour to do nothing, and then another hour to do something? That's what it means to have structure. That's what it means to read the tape. So if you can look at now, even look at Friday where it wasn't obvious, and look at yesterday where it was, and then go into Twitter, which had all that news yesterday, you can immediately see now that, yes, I'm active, and what the heck am I doing there? What the heck am I doing there? That is everything. That is everything. So what I want to do now is I want to challenge you. We talked about the market. We talked about the opening price in the market. We talked about the sector rotation, which we can get into that a little bit right now because that's a big part of trading as well. We've been talking about the sector rotation, and this is what I do every single day. This is the first thing I give to everybody in our community. Here's where money is flowing in and out from the deep pockets. We talked about yesterday, if you remember, yesterday morning, 7:30 in the morning, I said, coming into the week, recognizing the order flow, paying attention, diving deep into the scans, we recognized that Energy stocks were showing strength last week, despite the fact that the market was not obvious, despite the fact that they even closed lower, but there was buying above the opening price for all 4 days last week. That's how you separate yourself from struggling chart reader to trader, because you build these arguments, you put these pieces together, and lo and behold, energy popped all the way up to the top of the list yesterday. That's situational analysis, using Finviz language, situational analysis. So again, I am going to challenge you. It's 7:30, 8 o'clock in the morning. You are inspiring me to want to be better by giving you more content. So hopefully today's lesson was one that you could really implement immediately, which is, yes, I understand right now the smart money selling it. I'm going to use somebody here as an example. Let's say Joseph O'Brien. Joseph O'Brien's looking at a chart and he's like, oh my gosh, why am I buying this thing? The smart money's selling it. Why am I going to step in front of this? I'm going to wait until they start to step up with their buying power, and then I'm going to piggyback what they do. That's what we do in the boot camp. I teach you to wait until it's obvious. Then I teach you the entries, exits, stop loss, profit maximizer, and all that kind of stuff. But what I want to show you today is thinking a little bit deeper about whether or not you are building great arguments, and whether or not you're thinking like a trader or whether or not you're thinking like a chart reader. A chart reading is not trading. Write that down. Finding patterns on charts is not trading. You know what the hardest part of trading is? And we actually discussed it on last night's call. And again, the link for this is in the description right here. If we scroll all the way down, and this I can absolutely promise you right here. You know what? I'm actually even going to highlight that one because it's the absolute truth. Charts are the easy part. Managing yourself is the hard work. There is no other way to put it. You need to work on you to become profitable. What I'm showing you right now, you probably know how to find. Learning how to use it, that's a different story. And that's what I'm hoping I can inspire you to do, either by you joining the boot camp with us or sticking with us here on social media. I want to inspire you, again, to think, am I trying to be a better chart reader, or am I learning how to trade and make money? Again, we have custom scans in there and that kind of stuff, but this is the reason that I'm doing these every day. This is the reason that I hope you join me every single day. I want to ask you, are you thinking deeply enough to become a trader? I don't want to be the best chart reader in the world. You did not open your trading account to be the best chart reader in the world. You opened your trading account to get paid. You opened your trading account to make money. You opened your trading account to have that lifestyle that everybody dreams about, where your time is your time and you're doing whatever the heck you want. So I'm going to challenge you. Get this document. The link is in the description. Make a copy for yourself. The reason I want you to do that is I want you to look in the mirror and say, is what my focus on chart reading, or is my focus, like these questions, on trading? Am I asking trading questions, which is strategy, edge, tactics, entries, exits, stop loss, position sizing, when to add, when to get out, how to hold the winners longer? Do not ask, should I use a simple moving average or an exponential moving average? That's not trading. That's chart reading. That's not trading. So I have to end this call because we have to head on over to our game plan meeting for the boot camp, which starts at 8:30. We have to finalize what we're talking about there. Please do me a favor. Please click the link in the description. It's this entire document. You'll see boot camp, Google Doc, I think it's called. Make a copy for yourself. See if you can figure out what we're talking about in here. Dig a little bit deeper inside of yourself and ask yourself, what do I need to do to elevate from being the best chart reader in the world, which is not your goal, to being the best profitable trader that you can possibly be? Download that document and start asking yourself the tough questions, because that's what I'm going to keep doing. I'm going to keep challenging you to be better than you were yesterday. Okay. So I want to thank you so much for being here with me today. If you found some value here, please do me a favor, smash that like button and hit that subscribe button. I'd really appreciate it. And also let me know that you like this kind of content. If you have any questions about the bootcamp, there's a link on there for support as well. And you can click through and find out more about that too. So download that document and start asking yourself the tough questions, and then come back with some good questions that we can talk about. Remember, you want to be a trader, not the world's best chart reader. If you don't know the difference yet, that's what we're here for. Have a great day, everybody.